Good afternoon and welcome back to Casting Strategies. We are very lucky because today we have the Deputy Chief Investment Officer at LONVIA CAPITAL. These are French independent investment fund management company. In France, there is a great tradition of independent investment fund management companies with great fund managers, absolutely outstanding managers. In Spain, we speak about the big ones, but in this neighbor country, there is a very significant tradition of this independent management company that manage more money than Spain, and this is France, and one of them is LONVIA CAPITAL. Today, we are extremely lucky to have Cyril here, who manages LONVIA Avenir Small Cap, which has great, amazing records. Quite a few managers wish they had this kind of results.
Cyril, I'm totally glad to having you here today with us in the show. I was saying that in France there is a lot of tradition of independent management companies, more than we have in Spain, and with a lot of assets under management and a great track record. And LONVIA is one of those, and your fund is one of these products that has a great track record and a great profitability for the people that is investing with you. I'm totally glad to having you here today. And you have more than 10 years in experience in the financial markets. And I want to ask you, what are the characteristics that you appreciate most in your profile as a portfolio manager? You know, what kind of characteristic as a portfolio manager should have, and what you appreciate the most?
Yes, first of all, thank you very much for having me on ZONAVALUE. I'm very happy to be with you today to talk about my passion, which is investment. So yes, as we say, time flies when you're having fun. You're right, already more than a decade in the industry, and a lot of things happen on the financial market since then. But as a long-term investor, I think that the most interesting trend is the fantastic wave of innovation that we lived during these last years. And actually, this is a challenge that I love the most in my job, doing the best to understand the impact of this tremendous innovation on our investments. For that, we have the immense privilege to meet face-to-face with amazing entrepreneurs and leaders who share their vision of their industry, talk about their product, the dynamic of the market, the long-term strategy, and the numerous innovations on which the R&D teams work so hard to find solutions to contribute to a better world. And you know, I think that too often we forget that we live in a fantastic period of innovation, and that the capacity that the world has today to tackle big issues has improved dramatically. And the fact that scientists find vaccines to fight COVID-19 so quickly is, by the way, a true proof of what humanity can now achieve thanks to this fast pace of innovation. Also, what is very interesting is that digital innovation is not just a driver for information and technology companies, but creates tremendous opportunities and in other areas. And actually, last week, we were talking to a CEO to a healthcare company that explained how, using artificial intelligence, they are able to leverage a huge database of already diagnosed patients to detect with a high degree of accuracy if you have lung cancer or not. And early diagnosis is critical for patients because in many cases, such as for lung cancer, there are treatments that can save lives, but you need to be diagnosed at an early stage. And the huge advantage of this new kind of digital biopsy is that you can do it on a large scale at a fraction of the cost of a traditional biopsy and with zero risk for the patients. And at LONVIA CAPITAL, this is typically what we are looking for: companies that develop and spread amazing innovative solutions on a large scale and have a strong positive impact on society.
Interesting, Cyril. I have a question. I mean, at LONVIA Capital, a company that you have co-founded in 2020, you manage the fund LONVIA Avenir Small Cap Europe that Lorenzo mentioned before in the introduction. And it is a strategy focused on European micro and small caps with impressive performance. Could you elaborate a little bit on this strategy and what you do there in this fund?
Yes, absolutely, Ivan. 2021 has been a good year for the performance of our three funds, with a year-to-date basis as of 26th of November of plus 33%, with an alpha of 18% for the LONVIA Avenir Midcap Euro, plus 35% with an alpha of 17% for the LONVIA Avenir Midcap Europe. And lastly, for the fund that I manage, the LONVIA Avenir Small Cap Europe, plus 32% with an alpha of 12%. And, you know, these performances are in the continuity of the performances of our 2019 and 2020 stock selections. Now, coming back for this year performance, we think that it has been driven by the fact that the dynamics in which we are invested are stronger than ever. The economical consequences of COVID-19 was not financial crisis, but from a corporate point of view, a crisis of restricted growth and supply, with the particularity that the underlying demand is still there. And actually, demand is even higher than ever in medical innovation, with new therapies in development, in digital technology, leading to massive gains in efficiency for both governments and companies, and in the automation of industry and supply chains for all sectors. The COVID-19 crisis has accelerated the integration of digital innovations. That we are seeing is that this is not a one-off, but a prelude to an acceleration and even more integration of these digital solutions. Actually, according to a McKinsey study, the COVID-19 crisis has accelerated the digital transformation by more than 7 years. Moreover, we all have been positively surprised by a stronger than expected recovery, with very good results in all business areas where we are invest. For many of our companies, activity level in these first 9 months of 2021 are already higher than 2020 and even 2019. Also, what is interesting to notice is that operational margin reached record level, and companies are in excellent financial health, with ample capacity to invest in future growth, both organically and through acquisitions. More than ever, for best-in-class companies, the crisis has been an opportunity to improve their competitive situation, because thanks to their very long-term industrial strategy, they continue to invest in product innovation and geographic deployment, even in rough periods. This, we feel, is the basis for future gains in market share over weakened competitors. Also, our best-in-class companies are capital rich, which allows for an acceleration of the consolidation of the markets. This is a case, for example, of Lectra. It's a French company that develops software and automation solution for fashion, automotive, and furniture, who is buying out their main American competitor. And this is also true for Surgical Science, a Swedish company, which is a leading supplier for virtual reality simulators for medical training, who acquire a competitors 4 times bigger than themselves. Again, for many companies, continued growth or recovery in activity has been achieved with significantly improved margins. We can here mention Avenir, a French company that develops solutions to digitalize corporate back offices, who posted a solid top-line performance and strongly improve their operational margin. For the record, Avenir is one of the most successful French software companies in the US, where they already generate 40% of the sales. So our best-in-class companies continue to improve their competitive positions, and their share price has increased consequently. Just very lastly, I would like to mention that thanks to the fact that we doubled our investment team, we have strengthened our financial analysis capacity, increasing our coverage, particularly on the smallest part of our investment universe. Thanks to this, we have integrated new ideas with strong ambitions of renewing our selection and integrating the next champions of tomorrow, some of which have already strongly contributed to the performance of the funds in 2021 and will continue to contribute to the performance of the coming years.
Thank you, Cyril. I have to say that you have a great English accent. Yes, because you know, in Spain and in France also, you know, we talk a very bad English. So your English is perfect. I'm surprised about that. Okay,
I'm very sorry of not speaking Spanish. Sorry for that.
No. Great English is everything is perfect.
I will work with my Spanish team to change that for sure.
Okay. Perfect. Next time. Okay, but I want to you were talking about companies and you know, and your team or investment team, and I wanted to go deep to this point, asking you, how do you make your selecting process in the companies? How do you select the company, and when you find a company and analyze them with your team, you decide this company is going to be in the portfolio. So which are going to be the characteristics that these companies have to be in your portfolio?
Yes, so thank you very much for this question, because it's very the core of what we do here at LONVIA. So I'm glad to explain a little bit more on that. So first of all, I would like to mention that at LONVIA Capital, we use an investment process that has been developed by our CEO and CIO, Cyril more than a decade ago, with the impressive result that you all know. Our investment process is based exclusively on the identification, analysis, and selection of business models that we believe are sustainable and value-creating for a long-term investment perspective. When I talk about long-term value creation, this is once again the very essence of the success of LONVIA Capital funds. You should always think long-term. Markets are inefficient in the short term, but markets are efficient in the long term. And companies that grow and create operational value for the shareholder will see it reflected in the long run in the appreciation of the share price. And because we are here to stay for a long period of time when we invest in a company, we take our time before investing into a new one. We have the ambition to support the growth strategy of companies, not for the next quarters, but for the next year or decades. So for this reason, you have to be very rigorous in your analysis. Always do the best homework to understand the market and the business model of the company. So if we need 2 years, and it has already been the case for some of our past investments, to be sure that the management of a company has the right product, the right growth strategy to create value on a structural and long-term basis, we will take the time we need. At LONVIA Capital, we think in years or decades rather than quarters. So now to answer your question more precisely, when analyzing potential business models to invest in, we analyze different characteristics of the business model. But if I have to talk about the most interesting one, I guess it would be the capacity of the company to invest the fruit of its current activities in new projects to prepare the success of the next years and decades. Because, you know, you can debate endlessly about geopolitics, macroeconomy, the rise and fall of interest rates or inflation. But in the end, if a company wants to create value on a sustainable and long-term basis, there are no magic tricks. Top management has to find investment opportunities and have the courage to invest today's capital to prepare tomorrow's success. So our investment team is seeking companies who can enter what we call the virtuous cycle of growth. By that, we mean that we love companies that are positioned in the right markets, with the right products, and the right growth strategy. And thanks to that, have a high level of cash generation, which will then be continuously reinvested in their future growth. And we are convinced that by doing that, companies will create the conditions for future growth by systematically growing their addressable markets and investing in new products, new customers, and new geography. And thanks to these virtual cycles of growth, we invest in companies that can capitalize on their growth year after year, and therefore have the capacity to considerably grow in a few years from a local niche player in Germany, Sweden, or France to an international leader. Maybe I would like to say that at LONVIA Capital, we are deeply convinced that the role of the investor is to help companies to reach their full potential, often through supporting high levels of investment for the future and by encouraging top management to focus on investment in human capital, product innovation, with investment to conquer new customer and market segments and to expand into new geography. To sum up, I will say we focus on stock selection, are rigorous in our financial and ESG analysis, and think about long-term value creation, because it's only by investing in growth with a long-term vision that you can capture the capitalization of the operational value created by these companies during their growth journey and benefit from the capitalization of the market performance of the share price over time. Moreover, very last point, our long-term approach gives us an edge. We extract ourselves from market volatility, market noise, and just concentrate on the quality of the business model and the right execution of the industrial strategies of the companies we invest in.
It's interesting, Cyril, because you mentioned the ESG explosion, for example. Actually, the industry has evolved a lot during the last years. And I wonder, how are you adapting to these changes? Is there something that you think should be prioritized to entirely adapt for the challenges of tomorrow?
You know, on that, I think that if you are a trader and want to own a company for a few hours, days, or weeks, or even months, ESG is not an issue for you. But if you invest for years or decades, as Cyril Carrière has done for more than 15 years, ESG has been, is, and will be core to our investment process. Now, at LONVIA Capital, we have a robust ESG process, and we obtain the label ESR for all of our 3 funds. Now, if we want to talk about our ESG approach, I will say that it's a very pragmatic approach, close to an impact approach and based on an analysis of impact surrounding 4 pillars. Firstly, as we have doing for years, we look at the social utility function of our companies, the direct impact of their activity, because we want to work with companies that have a positive impact from a societal and environmental point of view. This means that we go beyond just excluding traditional sectors. We push our approach by excluding specific economic model that do not meet our positive impact vision. Then we associate these positive impacts with the United Nations Sustainable Development Goals, as known as SDGs. And we have grouped these 17 SDG under 4 major themes of positive impact, which are empowerment, health and well-being, climate and environment, and the 4th one, innovative technology. Second pillar of our ESG approach is, again, focusing on the direct impact of companies. We study the environmental impact and carbon footprint. And in fact, because of our strong focus on innovation, we have companies that have little exposure to these issues, and our portfolio has very limited footprints relative to our investment universe. Third pillar, we study corporate social responsibility policies and the positive or negative impact of the company's activities on its value chain, employee, supplier, community, and the environment. The idea here is to highlight the potential ESG risk that companies may face and to engage in a shareholder dialogue to understand the policies and process in place to address these potential issues. At LONVIA Capital, we are convinced that the ESG trend that we experience today will have a very positive impact for society as a whole, but also for long-term value creation, because it pushes the corporate world to elevate the standards and right thing for the employees, the environment, and society as a whole. And last but not least, the 4th pillar. Funding partners of LONVIA Capital has decided to dedicate 10% of our earnings to support projects that match our values in the field of medical innovation, social inclusion, and environmental preservation. The main goal of this philanthropic initiative are to bring more people into the virtuous cycle of growth and support environmental preservation projects to ensure that the virtuous cycle of growth will be sustainable for the next generations.
Great. Just to end this interview, this interesting interview, I just want you to give us some examples. You are talking about long-term value creation in the companies and with a long-term vision of investments, and also you are talking a lot about innovation as the key part of your investment process. So could you give us 2 names that can give us an example of companies that are feeling your ideas of investment and that you are invested for a long term on them, and why you are doing that in this particular case?
Yeah, sure. So yes, it's true. We are particularly invested in the field of medical technologies and digital innovation, but it's just the result of our stock picking approach. To be totally clear, we are not sector driven. We do not invest in thematics or a sector, but in companies that have their own growth stories. And so our investment go beyond medtech and IT companies. You know, there's a lot of innovation also in industrial automation, in consumer goods and services, with companies with tremendous growth perspective. Now, coming back to your questions, medtech companies have strong growth prospects, high margins, strong capacity to invest in their future growth, and a very positive impact on the society, which is all what we love at LONVIA Capital. Europe's wealth and diversity in this sector is amazing in the field of medical diagnostic and in equipment used by pharmaceutical and biotech companies to discover and produce new generation of drugs. The list is long, and the wealth of innovation in this field is incredible, with many innovative companies in Germany, France, or in the Nordic countries. digital innovation is also very present in our funds, you're right, and particularly through software. Again, high growth perspective, high margins, strong international deployment capacity, and very high ROCE. So software sector is an obvious choice in our search for companies that can structurally create long-term value for our investors and the society as a whole. Digital innovations offer an endless wealth of new opportunities for the corporate world that gain efficiency thanks to the automation and digitalization of production, sales, and marketing processes. But there is also tremendous opportunities for the more industrial companies to design factories, virtualize and digitalize industrial processes, and then, once built, to control and pilot them remotely. All this software are and will be at the heart of the development of companies, accompanying their digital transition in the coming years. Finally, maybe to give you a concrete example, I would like to add that beyond these major opportunities that the digital revolution creates, we can find great companies with growth and value creation profiles in other sectors. For instance, consumer good with the example of MIPS. So MIPS is a traditional success story, Swedish success story, sorry. So in 1996, a Swedish neurosurgeon, tired of seeing people hospitalized with brain injuries that occur in falls, even though they had been wearing helmets, decided to look for a solution. Ultimately, after several years of research, testing, and development, they unveiled groundbreaking solution to reduce the negative effect of rotational motion on the head. What is the result of that? Today, MIPS is a 3 billion market cap company with an operating margin above 40%, 40, yes, and has equipped more than 20 million of helmets with its unique technology that provides an additional level of safety for people. And they recently delivered another impressive top-line growth of more than 80% on the first 9 months of 2021, and has still tremendous perspective of future growth in its existing market, but also by entering the huge market of safety helmets for workers in the building sector.
Great. So thank you very much for being here today, for talking with us about your investment process and all the great job that you are doing in LONVIA Capital and in your fund, LONVIA Avenir Small Caps. Thank you very much for being here with us in the show.
LONVIA for me is a great example because beyond Spanish borders, there are great independent management companies who are doing an amazing job. We cannot ignore them when building our portfolio to avoid traditional biases. By doing this, we will avoid keeping on focusing always on the same names of the usual and the most common Spanish companies. So what we see in investing, that people keep on investing always on the same companies, we see it happening also in investment funds.
Thank you again, Cyril, for being with us.
Thank you very much, everyone, for being with us today with Casting Strategies. I'll see you in the next programs. I'll see you next time with Casting Strategies episodes. Please subscribe to our channel and give it a thumb up if you like it, and don't forget to share it.
Thank you very much again. We are gonna follow your job very, very carefully. Thank you.
Thank you very much for your time. I really appreciate it. Thank you very much.